Hello, everybody. I know I'm running late, and I apologize. Uh, Long day, and just finally got caught up on some stuff. So, yeah, like normal. So all this is live in my house. No fancy studio. Yes, that's the new office bookcase behind me, and or maybe visual shelf behind me that I got to stain and finish. And if you hear a cat yowling in the background, that is our cat, and he may or may not make an appearance. Um, I honestly kind of hope he does because we have a hairless cat. He's a tuxedo, gray and white, hairless cat who's actually hairy. He grew hair one year, like he grew a winter coat one year, and it never fell out. And it's a slightly longer length than peach fuzz. It's all over. He's more hairy on his tail and feet, and his name is Harry, like Harry Potter. So if you hear him yowling, he's around, and maybe not. He'll make an appearance. I did some research. Well, before I get into that, my name is Daniel Young. I am the owner and operator of Adapted Perspective LLC. You can find me here on Facebook, and I also run a Facebook group, and I have a Pinterest account. You can find me on Facebook at Navigate Your Finances. You can find me on Pinterest at Adapt Your Perspective. And then on Facebook, like the live stream says, it is Adapted Perspective. I did some research between last week and this week on the best way to show my screen. And I'm a little bit limited since I'm a new channel and I have limited content. I have limited views and followers. That's fine. My goal is to grow. I didn't walk into this thinking I would have 1,000+ followers in a very short amount of time. Um, so the best way for me to show my screen for these live events is to actually film it elsewhere and show my screen through making a video somewhere else and then upload that as just a standard video. It's really hard for me to show my screen on these lives. It would be amazing if I could show this, show my screen on my laptop and then video through an iPad, but I don't actually have that permission based on my overall views and follower count right now. So, in order to show you our closed-end fund list, our data that I'm going to talk about today, I'm going to have to make a video elsewhere, pre-record it, and then probably skip a live, but then use that video toward my live for the week. So we'll see how that works out in the next week. Goal tonight is to explain how we track our closed-end funds and a little bit more about how this came to be, and then also talk about how we know what we want to buy and what we want to sell. So before we get into that, so I believe the reason I'm doing these videos is I believe it's my purpose, my calling, to help you identify your dreams and help you reach your financial freedom destination and maintain it so that you can then pass that wealth off to the next generation. So back when we started our financial freedom journey in the midst of COVID, where all of us were forcibly trapped inside our homes with a lot of free time that we really didn't have before. In the midst of all of that, and by not telling you every single thing that happened, by streamlining this process a bit, I happened upon a group called the Contrarian Outlook. And I honestly forget how I happened across them, but at any rate, of all the different research I was doing, I happened across their group and their content, and read their material, and it was great material. It not all of it fit with our goals, but at the same time, their overall perspective was a really good one. Their perspective is to buy good companies that would go up in value, across their various formats, because they have different membership options, with the goal to live off dividends instead of living off or hoping to live off the speculative income side of stock trading. And like I was explaining to a friend of mine today, so if you buy, the screen, if you buy Apple at whatever price it's selling at, Apple pays 0.5% dividend yield a year. So inflation is at 4%. So even if Apple gains in value, they're only paying you 0.5% a year. You're actually losing money every year just based on inflation. So even if the stock goes up, you're still actually losing money over time because they're not paying a dividend that's higher than the inflation. So being able to live off dividends means that you have to earn dividends higher than inflation and have those solid dividends pay regardless of what inflation does and regardless of what the market does. So on the contrarian outlook side of things, their vision, their purpose lined up well with what we were looking for. And I liked their content. And I got to read their non-membership, and then I joined their membership. But I got to get their cherry-picked funds, but at the same time, it wasn't always all the info. And not all of their selections lined up with our budget. So even though I liked their emails and I agreed with their content and I understood their reasoning and I agreed with their reasoning, I wanted all the data. And at that point, I was still learning how to sift and how to evaluate. And even though I was still learning, I still wanted all the data. So since we were all stuck at home, teachers-wise, we were all stuck at home, and we had all this downtime, I sat down and found a website. There are a couple of websites, but I found the website I like the most with all the information on closed-end funds. And I sat down and went through every single fund, which was about 450 funds at the time. As of today, there's been a little bit of change over the past month, but there's about 441 funds at the moment. But I went through all 450 closed-end funds, and in a Google sheet, wrote, well, a lot of copy and paste, right? But at the same time, I put in all the data. So every single name, every single ticker, share price, dividend, when the dividend pays, how it pays, the net asset value. It went through and made a spreadsheet that helps calculate. I can reference that spreadsheet, even though I can't pull it up on here. But I went through and so stock ticker, how that company runs, like what section of the market it's in, what do they do? Are there any other companies that compare to that company? When they pay their dividend, how much a share? And if we bought shares, like if a company was $8 a share, that's great. But then if we bought 50 shares, it would automatically calculate, which that's so 8 times 50, that's 400. But if we bought something that's $9.33, if we bought 50 shares, the spreadsheet would automatically calculate how much that total investment was. And then based on the dividend a share, when the dividend pays, it would calculate the monthly or the quarterly yield as well as the annual yield. It would calculate the overall yield from their dividend compared to their share price. It looked at their net asset value, the overall discount to the net asset value. And then based on that, we sorted the list. It took maybe 3 to 4 weeks to enter all the data and then go back and sift all the data based on all of our buy parameters and our goals. And now I update the data every month. So today I updated all 451 funds, and we have created a target list. So I've earmarked funds of kind of like funds that we have a set base of funds that we track every week. So interesting funds to me for various reasons. All the recommended funds from the Contrarian Outlook and from other groups, and then also the funds that we own. And those select groups, so of the 441 funds, we probably track about 80. And then I update those every week. And then I still read a ton of market analysis. I read at least 1 to 2 emails a day. I binge read past newsletter issues from the Contrarian Outlook, and I just consume content. The complete list allows me to pull out a lot of funds that don't meet our standards, and then it allows me to cherry pick our targets. So we try to stay under $15 a share when we buy something. Now, if our budget changes, our investment budget changes. But we really try to target funds that are between like $8 and $12 that pay a dividend of lately it's been a dividend of 10% or more. And with the way the market's been doing, right, like the market went down, and then last week it rebounded a little bit. But before that, it was like down, 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 down. So since everything went down, it was really easy to cherry pick funds. And that doesn't mean we're investing every week, but based on the data we're collecting and the data we're sharing with some people, if you can invest into the market every week, you're getting a really great deal in the market every week. Let's see. But it allows us to take all the funds that sit below a certain annual yield and pull those out. It allows us to look at all the funds that are below $16, $15, and pull all of those out. And then of the remaining set, we can look at when the funds pay. Like if we wanted to target monthly funds, here's a set. If we wanted to target oil and natural gas, here's what we're looking for. If we want to look at bonds, which the bond market has, dropped like everything else. But at the same time, since it's dropped, it's kind of a good time to buy. Me personally, as much as I love certain bond funds, I wouldn't invest in bonds now because there's some other great companies to buy. Based on our targets, based on the earmarks, based on recommendations, based on our parameters. So our max limit generally per shade or per entry into the market, and then the minimum annual yield. I get to color code everything, and then essentially earmark it with symbols so that when I sort the list, it's in the order I want it in. And of what I still am a paid member on the Contrarian Outlook, and even they give great advice. Sometimes I agree with their advice. Sometimes I don't agree with their advice. So we own some funds that they've recommended. We own some funds that we've picked. And even though we have our differences, the Contrarian Outlook team and their teaching has been vital to our success. And I read their newsletters every time they come out. They gave me a foundation of knowledge on investments and closed-end funds that I didn't find anywhere else. And they continue to supplement that knowledge and teach. And then from those teachings, it inspired me to undertake something incredibly large and challenging. It inspired me to, my personality is to have all the data so then I can give a good input, which is kind of why I'm doing these videos too. It plays into my strengths, even though I don't. It's the scary, intimidating part of doing these videos. I like to process data and render an input based on an overall perspective, not just my perspective, but just an overall perspective long term, and then lead a pathway along that trajectory. And that's kind of maybe the really deep background of why these videos are happening. But I collected a ton of data, and that allowed us to take on, or maybe not that alone, but that really did help our ability to undertake our own investments and manage those investments on our own. So we have a self-managed portfolio with WeBull. And then it inspired me to help others understand and profit from the closed-end fund corner of the market. Every time I talk with a friend or family member about closed-end funds, they've never heard of them. Outside of some random thing I've posted, or video or Facebook post I've put somewhere, and they're very used to single stock investments or ETF baskets on Robinhood, or fractional shares on Robinhood, and closed-end funds are none of those things. They're much better than a basket that Robinhood makes for you. To my experience, WeBull doesn't do fractional shares, but you can, gosh, there's so many great closed-end funds that are now below $8 a share and that pay 10% or more a month, that you don't really, you can argue for a fractional share. I mean, 10.3 is better than 10 shares, right? But at the same time, you can buy a ton of shares cheap. I have not seen a disadvantage of having fractional shares. The only reason we have fractional shares in our portfolio is some of the companies that we have pay drip dividends. It's a dividend reinvestment program. So if we're getting pick a random number, if we're getting $8 in dividends a month from a company, they pay us the $8, but at the same time, they also deduct the $8 after they pay us, and it swaps into shares. So we end up with a $8 dividend that they then automatically draft out, convert it into shares, and then give us those shares. So we end up with fractional shares. So as we started that giant list of closed-end funds, it was just a single tab. Currently, it's a CEF master tab. Since I continue to read and research and cross-reference and learn, the initial spreadsheet has grown. It's now its own file. It's still a Google sheet, but it's turned into a single tab of 450 funds to 1, 2, 3, 4, 5, 6, 7 tabs of information. We flag single stocks, so all the different recommended stocks from different experts. I keep track of who's recommending them and when, and I keep track of the information shared. So the corner of the market, the specialty of the group. I keep a list and I keep up with all that. Yes, there's the master list itself, all 451 funds right now, as well as our investments from last year and our dividends reports from last year, this year's investments and dividend report. And then I added a weekly top selection that looks at top investment options based on what we already own, as well as 1 to 2 suggestions if you don't own anything. And my goal is to start doing, I would love to say start doing weekly videos, but start doing videos about how I sort and trim down our selections. So, we start with, so like today, I updated all 451 funds today. So I would go back through and sort the list based on our parameters. So anything $16 and over would get grayed out. Anything paying a, kind of see what the spread on general dividends is, but anything below a 8 to 9%, maybe 10% dividend right now would get grayed out. And then we'd be left with certain funds. All the funds that we currently own are color-coded. All the funds that are recommended are color-coded. All the funds that are interesting are color-coded. Those don't get grayed out. And then I go back and I sift back through those companies to see what their current discounts are, if their dividends have changed, if anything's strange or looks out of place compared to when the last time I updated the sheet. And then based on all of that info, I earmark or kind of a like a priority list of the funds that we would invest in. And then of that list, the top options are the top. I try to cull it down to 5 or 7, but based on last week's dumpster fire, it was 13 different stocks. And pending how you wanted to invest, it was a list of, if you want to invest in oil and natural gas, it's this. If you want to go for tech, it's this. If you want multi-sector and preferreds, it's this. If you want let's see, before I say if you want bonds, it was oil and natural gas, tech, real estate investments, multi-sector, business development companies, and preferred dividends. And bonds is a great choice, but I don't honestly know if the bond market has fully bottomed yet. But if it's lower than when you already bought it, I mean, you're already getting a better deal because it's lower than when you previously bought it. But if you should invest between bonds and natural gas, I would go with natural gas because pending, I want to say things are about $1 higher this week compared to last week. So based on what you've already gotten or what you've already bought, what you already own, if it's currently selling for more than what you bought it for, you're going to have to factor that in. Dollar cost averaging, I mean, over the course of time, if you buy it at 8 and 10, the average is 9. So sometimes you're going to buy, or I guess it's the reverse of that. But if you buy it at 8 and 10, your average is actually 9. So you're going to buy above and below that average range, or the median range, and which median is not average. That's not my point. But you're going to buy it above and then below that point. So if your current buy-in is at 8 and currently it's 12, well, whatever you buy is going to raise that overall midpoint for you. So you have to factor that in. Is it worth the buy, or is something else better for you right now? Oil and natural gas, even though it doesn't seem like it, oil is going to be in production till at least 2040, and I think longer. And natural gas is currently at a surplus. There's so much, it's just driving the cost down to where manufacturers are now saying we need to cut production or limit production because there's so much, and it's driving the cost down. And most people cannot weather really low natural gas. So when they limit and cut production, right, it's going to send the price back up. So limited supply, increased demand, increased pricing. So even though natural gas, or some of the closed-end funds in natural gas companies and energy transfer companies are about, of what we own, they're about $1 up from last week. Overall, they're going to be going up for a while. Right. So my goal is weekly, but I'll be honest and say I don't know if I can make that goal. So my real goal is 2 to 4 videos a month on how I trim down our selections and the investments. And my 2 goals with that are the videos help me reason out our selections. So they help me process and talk through our selections. and it helps you see the data and the value and the process of what I'm offering through our closed-end fund master. And then the videos also help give you a different perspective on how to evaluate the financial memes, because I do want to start breaking down those crappy financial memes that are floating around everywhere. There's a ton of data. There's a ton of information in that closed-end fund master list. Would I consider selling the access? Yes, it's crossed my mind. And to be honest, that's like when we made the file, one of the first things I thought of was, man, a lot of people would love access to this because it makes the process so much easier. Sorry, dry mouth and allergies. But as to how that would actually work, it's a answer for another day. Would I consider selling it? Yes, I already have. How that works out, I haven't figured that out yet. So for now, keep watching the videos, keep following along, see the value, and then we can revisit and discuss more. So if you haven't already, consider subscribing to my channel, and then like the videos, because one, it's great feedback. Two, it helps me actually hopefully get to a different technological ability. There we go. Where I can better show content on my screen, or more easily show content on my screen during these lives. Yeah. And then if you haven't already, head over to Facebook, check out my group there called Navigating Your Finances. I'm trying to split my content. Facebook, I'm trying to make, so if you look at Kiyosaki's 3 types of income, which I think is the best way to look at income, it makes everything so much simpler. Partly in the financial memes I want to discuss, so many people mislabel passive income and how that works. But Kiyosaki's 3 types of income: portfolio, earned, and passive. Facebook, I'm talking more earned income and passive, a little bit of portfolio, but just in reference, versus on YouTube, I'm specifically talking portfolio and a little bit about mindset and game planning, like the overall battle plan and kind of the mental landscape of how to figure out your I think how to say this. I don't want to re-say things. It's not navigating a budget on YouTube. It's perspective and figuring out the mental side of investment and managing money, versus Facebook is more budgeting and figuring out earned income and getting it, and how to bridge yourself from getting from earned into passive. Facebook is it's teaching you how to effectively manage money so that you have the money to either A, get into passive income, financial freedom, whatever that looks like for you, but also so where you have the money that you can invest into the stock market, versus YouTube is just how I would invest into the stock market. So if you want the stuff on Facebook, search up navigate your finances. And if you want to find the upcoming list of crappy memes for this channel, you can find me on Pinterest at Adapted Perspective. And let's see what else. Yeah, I think that covers everything. So as we get into this week, I hope you have a great week. With Easter coming up, hopefully you have a shorter week. If not, if you're still at work on Friday, that's okay, because there won't be as many other people at work on Friday. So hopefully your traffic commute is pretty chill. If you Like these videos. If you like the content, great. Yes, like the video. If you want more information, comment on the video and help me figure out what I need to post next, or what else I need to talk about in general. So as you figure out your journey, just remember, you have the power to change your life, and you have the power to change your financial future. Many people will offer to help you, but only you can make the choice to do it. Make it happen. Shock your world. It is far more feasible than this society will let you know. You can do it. So I hope you have a great week. See you on the next. Daniel Young signing out.